You have 8 Western banks that have maintained out of 1,000 plus commodities traded on the COMEX, the largest concentrated short position in any commodity ever traded on COMEX, and that is in silver. Why? That's a question that should be asked more than anything. Of course, you don't have any journalistic integrity anymore in the media, so they don't ask why. Why would JP Morgan be allowed to be the custodian of the world's largest silver trust, SLV and GLD, but SLV, after paying the largest fine the Justice Department ever handed out of $920 million for spoofing or manipulating the silver market? Now, many people thought they should have been brought up on RICO charges. People should watch Chris Marcus' Arcadia Economics channel and Google the podcast he did with Bart Chilton, who was the former CFTC commissioner, where he talks about this, admits a lot of this stuff I'm saying, and he dies a week or 10 days later. Now, could have been, they say it was natural causes. Maybe, probably was. I'm not saying there's a link between it, but he spoke out to what JP Morgan has done in the market. Business over the last few months has been parabolically higher than it had been any time since the pandemic. As Rick Rule would say, always, again, using Rick's comments, which I've copied, I've been friends with him for 25 years, is that from the average allotment or allocation of gold and gold-related equities from Joe and Jane Sixpack to the Harvard Endowment Fund is less than 0.5%. Now, the interesting thing is that the Harvard Endowment Fund just spent, I don't know, between 1 and 200 million on gold recently. Things are changing, but it's at that level that we're seeing the majority of purchases. During the silver squeeze, everyone and their sister and brother was calling us, and we were doing, 1,500 orders a day. Now it's a fraction of that, maybe 500, but much bigger in scope. You have people who are scared that the realization that things not only are messed up politically, geopolitically, morally, socially, even take your pick, go down the line, but that the dollar's in trouble. We can't even agree to keep the government open through things that, I'm not going to talk politics here. I have strong views on it, but it usually ends up being too polarizing. So we'll just simply say we're at a place where people who have worked all their lives to obtain money realize that it's easier to make it than it is to keep it. And so we've seen a big rush into metals lately, but that's still, look at what I said at the beginning, record allocation to the equity market by the public, record speculation through options and leverage through margin, all-time highs across the board. And at the same time, this month alone, we've already seen almost 59,000 gold contracts. Yeah, 59,000. So it's 58,639 as yesterday times 100, 500.
Major investment firms are revisiting traditional portfolio splits. Once almost universally a 60% stocks, 40% bonds paradigm, the framework is evolving. Firms now propose allocations such as 60-24-20, stocks, bonds, gold, or even 25-25-25-25, stocks, bonds, treasuries, gold in response to macro risks. At the same time, physical gold demand is increasing globally, especially in Asia. This suggests gold is being repositioned from boutique hedge to core strategic asset. The narrative: those who built wealth quickly recognize the challenge is keeping it.
5,863,900 ounces of gold have already been delivered on COMEX this month. Every single month we're seeing this kind of volume. That's never happened before. No one ever stood for delivery, ever. Less than 1% of contracts always stood for delivery on COMEX my whole career. And I've been screaming as loud as I could since 2020, since I got on YouTube, saying things were changing, that we have been seeing the constant offtake of metal through family offices and hedge funds under the title that came out of nowhere in 2020 called the Others. This is the Commitment of Traders report that is published by the Commodity Exchange. It was usually just two-sided, the commercials, which commercial banks, and the specs, the hedge funds. And they were zero-sum game. It would show the positioning, it shows the positioning of the biggest traders. Then out of nowhere, this third group of reportables pops up. They call it the Others. I expect this as hedge funds and family offices. They start taking huge deliveries off the exchange. Central banks have been doing it since 2017, but they have friends and wear different hats. And these are hedge funds and private family offices and sovereign wealth funds. And then you're seeing the same thing with the central banks. But you're seeing, never saw it here in the US. We've been net exporters of gold forever until November when Trump won the election. We've become, if not the largest importer of gold in the world, all of a sudden. Who's doing it? Why is no one talking about it? Why are we seeing billions and billions and billions and billions and billions of gold and silver come into the COMEX? Some stays, some leaves in the COMEX. It could stay in there, can leave. I don't know who's taking it. Why aren't we hearing about it? Why is there no mention of this on the media? I talk about it every day, but at that level, it's the people far above you and I and everyone else in this room who are the ones that have been buying it. The institutional traders, the sovereign wealth funds, the central banks. But to see it happening at this level,
Beyond price charts lies the physical metal story. For years, very few futures contracts actually went to delivery. Now we're seeing unprecedented delivery volumes and large off-exchange accumulation. Private offices, hedge funds, sovereign wealth are moving metal from exchanges into vaults. Concurrently, the U.S., historically a net gold exporter, has become a major importer of gold in recent years. Media coverage remains scant. The implication: the quiet money have been accumulating while the masses stayed distracted. The textbook game of paper promises may be giving way to metal in hand.
where you get the chief investment officer of Morgan Stanley now saying instead of it being a 60-40 split between stocks and bonds, as Wall Street has used for 50 years, that was the typical portfolio. And in an interest rate environment that's going straight down since 1982, that would have done well. 60 stock, 40 bond. Now he says, no, 60, 20, 20. Sell half your bonds, put half in gold. Michael Hartnett, the chief analyst for Bank of America, no, he says 25 stock, 25 bond, 25 short-term treasury, 25 gold. You got Jeffries, a former U.S. Mint authorized partner who I worked with for years, and they nominated us to be a authorized reseller. They were one of the primary distributors for all the mints. They know gold better than anyone, although they're not in that market anymore. Next stop for gold, they say 6,600. You got Jamie Dimon talking about it. You have Goldman Sachs talking. Everyone's talking about it at the ultra high level. Those people have been doing it, but the public, no, they're still anesthetized. But like I said, if it's a 0.5% and it goes to 2%, well, that's a fourfold increase in demand. And guys like Keith would notice it. And it is getting busier. I notice it. But we're yet anywhere near, I think, that level where the public has woken up to the fact that the road to retirement is not always just paved with stocks and bonds and mutual funds. Quite to the contrary, we are entering a period of time where even the best laid plans need to be reevaluated. Here in the United States, I mean, I've owned a gold company for 36 years. People know what I do. Um, but I couldn't have a coherent conversation with 98% of the people I know outside of work for more than 3 minutes on the merits of gold or macroeconomics. Um, and that's the problem, or that's the point. And that plays right into the hands of the big money who has used misdirection of price, of rhetoric, and of lack of media coverage to reposition well ahead of the masses.
Silver presents an even more complex picture. It's both an industrial metal, critical to electronics, solar panels, EVs, and a monetary hedge asset. Supply constraints are mounting, mining output is flat or declining, recycling can't fully compensate, and deficits have prevailed for years. These structural issues mean that when incremental demand arrives, the upward price pressure is magnified. It's a metal tied to both cutting-edge technology and traditional wealth preservation, an unusual dual role in today's markets.
And that's why I've been screaming for 5 years now, going on 6, that the big money is accumulating physical metal, standing for delivery. You look at almost 40 nations have brought their gold back from the Bank of England and the New York Fed. These were the entries into the COMEX and the LBMA. Why repatriate it? Why bring it home? Why go on a massive buying spree? Why reclassify gold in essence as a high quality liquid asset or a tier one asset, the way they treat it as a tier one asset? Why are we seeing all of these things and yet the public doesn't understand it? Is because, well, people who watch guys like you and I have seen it, but the rest of the world, they don't see it because they're following a mainstream media that has completely blackballed it and ignored it. And maybe that's by, maybe that's on purpose. Every radio, TV, newspaper, every media outlet in the United States is owned by four companies, so the information is filtered to their liking. And there's a fine line between conspiracy and reality. I'm not trying to sound like a nut job, but it's true. I mean, you're going to ask yourself, why is it that gold has outperformed everything? How about this one? Gold has quadrupled the performance this year of the S&P 500 in the midst of the greatest AI tech boom in history, right up there with the advent of the internet in terms of significance. And it's quadrupled it this year. But where is the coverage of it? Nowhere. So it's an interesting phenomenon. Fair, it was above it reached its all-time high 2 weeks ago or so at $54. But I get your point. I understand it. And you could argue, I could argue, and again, fine line between conspiracy and reality. You have 8 Western banks that have maintained out of 1,000 plus commodities traded on the COMEX, the largest concentrated short position in any commodity ever traded on COMEX, and that is in silver. Why? That's a question that should be asked more than anything. Of course, you don't have any journalistic integrity anymore in the media, so they don't ask why. Why would JP Morgan be allowed to be the custodian of the world's largest silver trust, SLV and GLD, but SLV, after paying the largest fine the Justice Department ever handed out of $920 million for spoofing or manipulating the silver market? Now, many people thought they should have been brought up on RICO charges. People should watch Chris Marcus' Arcadia Economics channel and Google the podcast he did with Bart Chilton, who was the former CFTC commissioner, where he talks about this, admits a lot of this stuff I'm saying, and he dies a week or 10 days later. Now, could have been, they say it was natural causes. Maybe, probably was. I'm not saying there's a link between it, but he spoke out to what JP Morgan has done in the market.
The supply side of precious metals is under unusual stress. Silver, in particular, is facing deficits projected at over 100 million ounces in 2025. This while gold demand from emerging markets and central banks is steadily rising. In some markets, spot shortages and delivery delays are being reported. For silver, the fact that much of the supply is a byproduct of other mining operations means price alone won't quickly boost production. The risk of a failure to deliver or large-scale forced revaluation is rising.
And very clearly, Chris Marcus, Bart Chilton, Arcadia Economics, watch it. Everyone who owns gold should watch it. And silver. But the thing is this, the why to me is fairly easy if you have an open mind, and that is that the military industrial complex needs massive, massive, massive amounts of silver to manufacture high-tech weaponry. Go to silverwars.org and you'll see how much they need. They used to publish it within the supply-demand figures from the Silver Institute. They now omit it. We've had over a 200 million ounce shortfall between supply and demand for 5 years running. The military industrial complex is running the country, running the world, in the respect that they're the ones who are making these decisions. In essence, this is what we were warned about a long time ago, but they make high-tech weapons and sell them around the world. Who owns the majority of the weapons manufacturers? Well, that's BlackRock. Who's the other primary custodian of SLV with JP Morgan? Oh yeah, that's BlackRock. There's a 81 or 2 million share short position right now in SLV, which drives the paper price down. And then they go in and take it and do what with the money? Do they buy physical? What do they do with it? I don't know. We'll have to figure that out later. We don't have enough time to talk about it. But my point is this. You look at BlackRock, who is, in many respects, in terms of their ownership of all of the weapons manufacturers, highly tied into, if not part of the military industrial complex, who makes high-tech weapons that need massive amounts of silver, from cruise missiles to ICBMs to F-35s to stealth bombers, you name it. They all have tons of silver in it. And this is not just in the United States. These are the kind of UK, France. They're all in, have all been in cahoots with this. Standard Chartered Bank, HSBC. These are all the banks that were told by, my belief, by their respective Western governments, step on the price of silver, don't let it go. We need silver inexpensive enough so we don't get crowded out of the trade. And it's not even about the price going high, it's about its diminishing in nature. It's disappearing. Ask Keith Neumeyer, he'll tell you it's coming out of the ground at 7 to 1. He's told me that personally for years. 7 to 1, but it's priced at 88 to 1. It was priced at 16 to 1 for 5,000 years. So a company like BlackRock, who is the primary custodian along with JP Morgan of the world's largest silver trust, and there's an 81 million share short position, which in my opinion should be legal. In essence, you're creating shares out of thin air that aren't backed by silver. Even they came out and wrote in the prospectus that be careful shorting this. There could come a time where you can't get the shares or the metal back, and you could be exposed to a huge squeeze.
Despite all of this, mainstream investor awareness remains muted. Most investors continue to rely on stocks and bonds, unaware of what is happening in the background. Surveys indicate many funds still have zero gold allocations, even as price records are being broken. The media's attention is elsewhere, yet when institutional allocations tick higher, from say 0.5% to 2%, that's a fourfold demand increase. In a tight market, small shifts matter. The conclusion: we may be moving into a phase where metals take center stage in wealth preservation, not just speculation.
But the point of it is that they're the custodian of SLV with JP Morgan, and they are, in many respects, the military industrial complex. So when we sell weapons all around the world to places like the Ukraine, and Ukraine gets blown up, who gets the reconstruction contracts? Yes, that's right. It's BlackRock. And so when you talk about why has silver not performed, it's because there are 8 Western banks that have held the largest concentrated short position in the history of the COMEX market. But as I've said for 2 years now, slowly, methodically, the BRICS nations are exposing this. And they have been standing for delivery. That's why the LBMA has its lowest amount of silver in ever since they started keeping records, about 150 million ounce float against 2 billion ounces in paper contracts that could stand for delivery. They're trading 600 million ounces a day in paper contracts. What could go wrong? And that's why you're seeing this panic. This is why they slammed the price of silver down, in my mind, the other day, and a whole bunch of silver that somehow flew to London to keep the thing going, that maybe gave them another month or two, ease the stress. That's why London was T plus 8 weeks most of the year for delivery in a market that is T plus 1 day. In other words, T trade day plus 1 settlement. The third day, the bar should be moving. Sorry, they said, for a good portion of the year, the Bank of England, we have a shortage of manpower and trucks in London. We're not able to move your metal fast enough. That means they got caught with their pants down. It's close. And it's because the countries around the world who are now coordinated, motivated, sophisticated, and wealthy say, aha, you want to play this game? We'll beat you at it. We'll suppress the paper price too. And we will stand for delivery as well, because now we're wealthy. And now we see what you're doing. In fact, we're smarter than you. We will use your suppression of the paper markets against you. And that's what's happening. And someone in the West, I think someone, God, thank God, got to Trump and said, if we don't do the same thing, we're dead. And now you have the US government proposing and already in draft form reclassifying silver as a critical mineral. It will have its day. Um, and the deliveries by the most not only well funded, well informed traders in the world have been bleeding dry all the silver they can. That's not nailed down. You have China, the second largest producer in the world, flying all across the globe, largely in Latin America, Peru, Mexico. They're buying doré right from the miners, like Keith, and concentrate, which is a byproduct of sludge. Doré are the crudely refined bars, and sending them back. They pay double what the West will and send them back to China to refine it in themselves. This is the second largest producer of silver in the world. Why would they do this? They see the big picture. And they've been using the stupidity and our hubris of suppression, keeping the military industrial complex able to get silver without the world rushing to get it, knowing its true value, looking at it as why the hell wouldn't it go up in the face of all of this craziness and inflation and blah, blah, blah. They know that. So they step on it, make everyone say, see, it's a piece of crap, don't buy it. Right, that's right. Until the suppression ends. And one of these banks that have been shorting breaks ranks to cover, and the whole thing blows apart, or worse yet, a failure to deliver. You see a failure to deliver in London on one of these major banks. These banks aren't just bullion banks. They have their fingers in every financial pie across the globe, and the contagion, the systemic reaction would be very dangerous. So yeah, silver will have its day. The only way you can manipulate a market for a very long period of time is to push it in the direction that it is going. And they've been able to do that quite handsomely for a long time until all of a sudden we're the most well-funded and well-informed traders across the globe, including here in the United States, understand the significance of standing for delivery instead of rolling forward paper promises. And I think we're at that point right now.